And we are live. Welcome, Dr. Cedric TA. Dr. TA, you are a professor of international economics at the Graduate Institute Geneva. You have previously worked as a research economist in international research section of Federal Reserve Bank of New York. Uh, you have done a lot of research on international financial integration, policy conduct in international economies, and the prominent use of some currencies. And you have also been a member of Swiss National Bank Council for a long time now, and the head of bilateral assistance and capacity building for central banks program. So welcome to you, Professor TA.
Thank you.
So, Professor TA, I mean, we have been hearing a lot about stimulus packages, massive stimulus packages being announced because of COVID. And and given that there has been a very limited economic recovery since the global financial crisis of 2008, we have had maybe 1 year, 2 years of good recovery. What do you think these packages mean for the future of public finances?
Well, the first point to bear in mind is these packages are necessary. So, for health reasons, we want to limit economic activity. But if you don't help people during this time, then you will have firms failing and household indebtedness problems. And these firms would fail for no good reason in the sense that, except for the epidemic, these firms are fundamentally sound. So that would be a waste of resources. That's why spending, as we do in Switzerland, for instance, people get paid even if they don't work, because the idea that firms keep people on the payroll and the government pays. That actually is the best option. Now, of course, that means debt. That means a deficit. And here there is a lot of heterogeneity. You have several countries that already had debt, so they have limited fiscal space, to take the standard expression. They don't have much room. It's like a household running a credit card debt, which is pretty close to the borrowing limit on the credit card. So then you're in trouble. But there are other countries who have a lot of space. So you're far from the limit on your credit card. And this would be countries such as Germany or Switzerland is a very extreme case of that. And also the US. The US debt is high, but it has still a margin. So these countries can afford to borrow. And this is a one-off debt. This is not a situation where you have a structural problem and year after year you keep running a deficit. This is really a one-off. It's like if you have a damage on your car, well, you go and pay for it, and you don't expect the damage to take place every month.
Correct.
And so on, you spread the cost through time. But there are some countries who are hard pressed to do this on their own, and they will need help from the others.
Exactly. Yeah. So I will talk a bit about some of these things later. We'll discuss these. But in the short term, you talked about that the countries will need to take debt right now. So how do you see the governments funding it? Can they really afford these packages? Some can, some maybe cannot. So how do you see that whole funding process going right now?
So what is interesting to look at now is the interest rate on long-term government debt. And they're actually quite low. So which, if any, so that's good news for the public finance. What is less pleasant is when you have low rates on very long maturity debt, it means that markets expect low growth ahead. So you have a cost of borrowing for the country which have fiscal space that is very low. And in fact, actually, the yield can be negative. If I take the case of Switzerland, the yield on a 30-year Swiss government bond is negative. People are literally willing to pay the Swiss government. So it's like a safe in a bank. You're willing to pay to keep your money there. So for these countries, that's not a problem. If anything, the markets are begging them to borrow. A country like Italy or Spain are in more delicate situations. But they're not alone in the sense that they're part of the European Union. And the whole discussion that's currently ongoing and has been going for quite a few months is to say, well, can the countries in Europe who have more margin help the ones who have more of their back against the wall? And this is going slow, but it's going the right way, I think.
So this international cooperation, I think we talked about, and we see that there are some countries which have traditionally been more fiscally conservative as compared to some other countries. How do you see this international cooperation coming here, especially, I mean, with regards to emerging and developing economies?
So we have at the regional and global level. As the regional one, I mean, the case of Europe was really a question mark because there was initially reluctance to help. There's many of the savings countries with high savings that say, well, why should we help the usual borrowers pay back their debts? But now we have, the other day, Germany was really put its weight behind some common plans. So Mrs. Merkel was very clear. They really understood that what is at stake is the future of the European project, no less. And Germans are ardent Europeans. I think it's important to bear that in mind. So they will do what they have to do. Globally, it's more challenging. Several emerging and developing economies are being hit hard. So they have trade collapsing, and these are countries very reliant on global trade. You have a very big pullback of international capital flows. So this is the biggest sudden stop we've seen. Foreign investor not only stop investing in this country, but they actually pull out. And the IMF has been very active. They've disbursed a lot of packages to many countries, to these facilities that can be activated very quickly. There's also effort from the G20 to say, well, many countries have payments on their sovereign debt. And so the G20 says for the poorest, we basically put a standstill for what they owe the G20 governments. A big question that remains is like, fine, if you help the poorest country and you help them for payment on the debt they owe to other governments, that's what the G20 has done. But if you look more broadly to emerging markets, especially the upper middle income, they also have a fair amount of sovereign debt payments that are due. And a lot of these are due to private investors. So there is now a proposal by a group of economists and international debt lawyers, and it includes two of my colleagues, Professor Panizza and Vedder Di Moro, where they ask effectively the IMF to have a standstill facility. The idea is like an emerging country that owes an interest or some principal payment this year. They basically could pay it to the standstill facility, who would then send the money back to the country to help with health-related issue. The creditor would have a claim on the standstill facility. So the idea is to tell the creditors, hold on, just wait 2 years before getting your money. We keep track of what you owed. Okay. In these 2 years, we help the country, and then payment will resume, which in the end is the interest of the creditor. Because if someone owes me money, what is the worst? That the person tells me, look, hold on 2 years and then I'll pay you back, or that I demand they pay me now and they go bankrupt. So clearly, waiting a bit, it's never pleasant when you're a creditor, but that would be actually much better. So there's a lot of effort being there, and it's very important for this to be deployed as rapidly as possible.
There have been countries, I mean, even before the whole COVID crisis happened, there have been countries where the situation of public finances has not been that great, to put it very mildly. Countries like Argentina, for example, Spain, challenges in the past. Pakistan has also gone to IMF a few times. How do you see those countries, emerging out of this crisis at the end, whenever this crisis ends?
So it's very true that the packages of help because of the crisis should not go into pouring money down a structural problem. So there's two issues. You can have countries that have been something very deep-rooted for a few years. And on top of that, you get this accident, this health crisis. So the idea is like, okay, the accident is not your fault. So we help you to pay for that. But the deep-rooted problem is still there, and that is there's no miracle. That is something you should be doing the hard work about. So what is important for institutions such as the IMF is not to mix the two. And you say, okay, we can help you, but this help will have to go through improving your healthcare system. So really expenditures that are clearly related to this accident of the epidemic. They should not go to paper over a structural problem. For the structural problem, these are the usual tools that you need, structural adjustment program, which are never pleasant, but that's the way to go.
But how do you differentiate between those two? I think somebody like Italy, it's I think a very issue as well.
Exactly. So that's a tricky one. Yeah, I mean, if I were asked to be sent to a country and then figure it out, like, well, gee, that's going to be hard in short time.
Yeah.
That's why institutions such as the IMF or similar institutions are very well placed. Why? They have desk of economists who follow these countries, who know them quite well. And they've been following them for years, especially
Mhm.
countries that are already in an IMF program.
Correct.
So the human capital, the experience is there for them to make a call. Of course, economics is, especially when you have to make a decision in real time, you never
Yeah.
get it totally right, but that's part of the
Correct.
game. So what is important is to have, if you put a rescue package, you
Mhm.
need an honest referee. You need an institution that says, okay, we know the country, these millions are truly being used for the COVID, so they should be
Correct.
treated differently than this other part of
Correct.
billion, which are used for structural problem.
Correct.
Italy is not under an IMF program,
Yeah.
but you have expertise to the European Commission or the European central banks that could also bring
Yeah.
that.
Correct. So, which brings me to the other side of the picture about central banks, right? How do you see central banks responding to this crisis? Do you see there's a more collaboration between central bank and the treasury, like what has happened in the US? And do you see any impact of this on the independence of central banks moving forward?
Mm. So I think let me put it in two parts. There is a part that's really related to the health, and then there is kind of a deeper issue there, which will only grow as the time goes. So starting with the crisis, the central banks have been very aggressively. And what is quite striking is the case of the Federal Reserve. Over
Mhm.
the span of a few weeks, we've seen the balance sheet of the Fed increase dramatically. And
Mhm.
what has happened in the early stage, it looked like some financial markets were being blocked. You started seeing some spreads of risky assets
Mhm.
really go up a lot. Then the Fed stepped in and unblocked the issue. So they basically removed the bottlenecks, and we've
Mhm.
seen spreads coming down, not all the way, but so it
Mhm.
looks like for a while there was a real danger of a seizing up of financial market. The central
Mhm.
bank has done its job taking care of that. They also have been aggressive trying to support the economy. Now, central banks are powerful, but they're not the only game in town. It's
Correct.
very important, especially in a situation like this. The idea is not that we should start economic activity right now. There are very
Mhm.
good reasons why we want to have some social distancing in place.
Correct.
And that's more a job of fiscal policy to basically say,
Correct.
okay, we're going to borrow from our future income to help people right now. That's a transfer. That's not really a job that should go to the central bank. And
Mhm.
that's why the central banks, if anything, have been saying, look, we're doing what we can, but please don't
Mhm.
let us do this alone. Okay, there is a very clear, for instance, Chairman Powell has been saying like this can be serious. It's important that Congress and the White House pass some substantial package
Correct.
because the challenge of central bank, I mean, their big assets is they can move fast. But in a
Mhm.
way, it's also a curse because if you can move fast, then you move and the other players say, great, you moved. So now it's your problem. And say, no, I can do my part, but you should also do yours. And that's really the challenge. The central bank should say, don't expect us to do everything. That's
Mhm.
not our mandate. That's not, we
Correct.
cannot do everything.
Correct.
So we need the fiscal policy to come. And
Mhm.
this has been an issue already before the current crisis, because we
True.
have very low interest rates. So there's
Yes.
a limit on how low you can go. And
Correct.
there's a lot of research that says, well, in this situation, fiscal policy as a business cycle tool is actually quite powerful. So we
Mhm.
used to think, let's say 10, 15 years ago, that business cycle management is a job of the central bank. Well,
Correct.
now there's more reason to say maybe we should also be a job of the fiscal policy. And the key
Correct.
question is how do make sure that these two music players actually play an harmonious tune? So how do
Correct.
you coordinate without having the central bank become dominated by the treasury?
Mhm.
So you have to put governance procedures in place. I think this is feasible, but that's actually a very interesting challenge that policy
Mhm.
faces. We're not in the times where, okay, the central bank does a business cycle and they can do it all. Now they're a bit constrained. Maybe they can develop new tools, and there's a lot of discussion of that. But
Mhm.
maybe they also need support from other
Yeah,
policymakers.
sure. So, what do you think about the U.S. Policy, or rather, a stance that they do not want to go into negative interest rate territory? Any feedback on that?
Mhm. So negative interest rate are a very interesting topic. So some country, I mean, Switzerland is in negative, and it's been now 5 years that we're basically at minus 0.75. Can we go lower? Probably less. How low? That's a great question. There's a lot of
Correct.
people wondering about that. The ECB has been doing it. The Fed is reluctant. And there's a literature say, well, is there something special about negative rates? Because you may say, well, look, going from 1 to 0 or 0 to -1, what's the difference? Several
Correct.
people have pointed, well, banks can be in trouble because they don't want to pass negative rates to their depositors, but they have to
Correct.
pass them to the loans, and the profit margins can be squeezed.
Sure.
Several papers I looked at this. It's not so clear that this is indeed the case. Or more exactly, what we've seen is, yes, there is a pressure on interest rate margins, but banks have developed fees and other source of income.
Correct.
But a question that maybe remains open is, well, do negative side effects build up as you keep this policy in place for a long time? Could be that, okay, you can develop other source of income for 2 years, but
Mhm.
after a while, they start to wait. There's no clear evidence that this is actually an issue, but there's no clear evidence that it's not either. So there are a lot of challenges when you're going to negative territory. Some people
Mhm.
argue that the policy pass-through is not that strong. And again, none of this is firmly settled yet, but these are really issues that are being discussed a lot. But what is interesting also is the country like Switzerland, who have put negative rate, is a country where you may think that this would have been the hardest. Why? Because we use cash a lot. In international comparison, the Swiss actually transact a lot through cash. And we have big denomination bill. We have the biggest bill is 1,000 franc, which is roughly $1,000. So if there's one country where people should be willing to put things in cash, which is why we think there is a limit to interest rate, it should be Switzerland.
Yeah.
So far, it hasn't really happened. Okay. There's a lot
Mhm.
of increase in cash holding in Switzerland, but that's really since 2008. So this was more an issue about people being concerned about banks and things like that.
Correct. Yeah. So I think it's another interesting point here you talked about is the relative stability of banking system currently. The 2008 crisis was started or it precipitated because of the banking system. But at this time, we see that the banks are relatively in a better shape in terms of their balance sheets, for example. So how do you see banking system supporting the economic recovery, helping avoid liquidations for the companies, SMEs specifically, for example?
Mm. Yeah, so it's a very valid point. What is key if you want a recovery that is fast is make sure there's no debt hangover. That's really key. I mean, we have plenty of evidence that historically, let's say in the 60s, 70s, we have V-shaped recessions. Why?
Mhm.
Well, because the recession is there because monetary policy was tightened. Well, what the central bank damaged, it can undo. So as soon as monetary policy was eased, boom, we went back to square one.
Mhm.
Recession like the 2008 one were different. We
Mhm.
had debt and hangover. And we know full well from theoretical and empirical evidence that once people have to digest the debt, this takes a lot of time. And in
Mhm.
fact, if I want to repay my debt, and so does everyone, well, my spending is your income. So we all drag down each other's income, and that makes the problem even worse. So debt
Correct.
hangovers are really nasty.
Mhm.
Currently, banks are okay. So much better than they used to be in 2008.
Yeah.
Question is, well, how does it look like in the so-called shadow banking sectors? So
Mhm.
financial intermediaries that are not commercial banks.
Mhm.
There, it's more open. But I
Mhm.
think also what is important for policy is to make sure that it stays that way. Okay,
Correct.
and that goes back to the need for fiscal policy. Because once one option you may say, well, some firms go bankrupt. Okay, let it happen. Well, then your banks suffer no performing loans. Then you start having a banking problem. You start going into a debt overhang, and you put
Mhm.
yourself into a very long recovery. Well, the other option is to say, okay, let me pay the firms for a while so they don't go bankrupt. And then banks don't have non-performing loan, and then we have better chances for more of a V-shaped recovery.
Got it.
So it's better to actually run a deficit right now. Of course, we pursue a deficit, but bear in mind that if you don't run it, you may actually end up in a worse situation for public finances because you would have put your economy in a debt overhang, which takes time to get out of.
Good. I think
Yeah.
another point would be obviously when we emerge out of this COVID situation, do you foresee that more countries will become fiscally conservative? I think the countries which are running a budget, which have been
Mhm.
traditionally a budget surplus, are the ones which are in better state right now to have massive stimulus packages. Do you see the global trend to become more fiscally conservative, like what you mentioned about happened after 2008, people holding more cash?
So what is the challenge there is if we all want to save more, that's going to be a problem because for
Mm,
each franc or dollar you save, someone has to borrow it. Okay. So if you have
correct.
an economy where the savings propensity goes up, what you would have is the interest rate would fall a lot.
Correct.
And if there's a limit because of some price rigidities, you may actually put yourself in a recession. Okay.
Mm,
And also the interest falling is a problem for pension funds. And
correct.
that's something we see in the discussion in Switzerland and Europe. People are a bit riled up about negative rate. They say, well, saving is a morally right thing to do. So how come I'm punished? And my answer is like, well, it's about economics. It's not about moral. You want to save more, there's a market clearing price. And the market tells you, I don't know what to do with your money, okay, in a way.
Mm, mm,
So if all government starts, moving into surpluses or smaller deficits, well, then either the private sector starts savings less. So in a way, you move from a sovereign debt to a private debt. It's not clear that there's actually better things to do because government has more margin, or you may
mm,
actually hold down economic activity.
mm,
What I
mm.
think is more promising is to put some clear fiscal rules. And let me make a
Correct.
parallel with monetary policy. So over the last
Mm,
20 years, most, if not all, central banks in the world have moved to some variant of inflation targeting. What
correct.
is key in inflation targeting is not just to say, I want low inflation, but you put a set of communication. You don't literally publicize a rule of how you set the interest rate, but people can
Mm,
guess it more easily. So you become
correct.
more transparent. And also you
Mm,
make explicit that you have a long-term view, and the advantage of that is you basically able to affect people's expectations. If you
correct.
say my behavior in the last couple of years is going to be like this, even I may not do anything right now, but you know what I'm going to do in the future. So I
Mm,
think the way forward for fiscal policy is to move in that direction. Okay.
yeah.
If you think of debt sustainability, is it important what the deficit is like this year or, not, or next year? No.
Mhm,
What is important is what is it going to be over the next 10, 20 years? So
correct.
you want to put in place a system where you say, okay, you can run deficit once in a while, but you have to offset them. So overall, you balance or maybe inside deficit. And
Mm,
Switzerland actually has such a system. So it may sound hard to believe now, but in the 90s, Switzerland had an exploding debt problem. If you look
mhm,
at debt to GDP, it was going up really fast. And
mhm.
we put in place a debt brake at the
Yeah.
federal level, which says, roughly speaking, that, okay, you can do deficit in some years, but you have to do surplus in others. It
Mm,
turns out we've been kind of overdid it. And over the last 10 years, we actually run surplus over surplus over surplus. So I've
mhm,
been in some writing quite critical of this too stringent interpretation of the rule. But the
mhm.
mechanism itself is a very good one. Because the big advantage is it forces some long-term thinking into the planning of fiscal. So Switzerland is not a country where some party can come in power and another comes the next one. I mean, we always have all parties in power, so to speak. But
Yeah.
also, even with that, with this rule, if you start doing some spanning, you have to say, well, hold on. The rule forces me to think at an horizon of quite a few years,
Correct.
and people know that, so it also helps with expectations. And then you
Mm,
can behave. You don't have to behave well right now, but you have to behave well on average and in the long run. So my recommendation would be more move towards this rule-based system with a long-run view, which can give you the flexibility to be quite aggressive in the short run. Exactly like for monetary policy, inflation targeting basically tells people on average inflation would be 2%. So when the central bank is very aggressive right now, people say, okay, they're being aggressive, but we know that they're not going to let things slide by the way. And if we start having inflationary pressure, they'll be on the job to prevent it from spilling over. So when you well behaved in the long run, people are much more forgiving for any deviations you do in the short run.
Which just shows that the banking system cannot work without the political system to support it. In most democracies where you have short political cycles, something like a long-term planning might not even be feasible because every government has their own, uh, policies and plans to spend. So those are some very important points, I think. Uh, I have a lot of thoughts in my mind or questions in my mind, but the time we have, I'll ask you one or two more questions. One would be about how do you see this whole impact on digital banking and digital currencies? Do you think people are going to go more in that direction, or people are still keep the traditional banking system right now?
Okay, so let me. So there are some deep city trends towards fintech. I don't think the epidemic is going to change them. So this is a long-run development. The use
Correct.
of electronic payment instead of cash that could be accelerated because we may not want to hold a piece of paper that was in someone else's hands. Okay,
Yes.
fair. So there I could see some acceleration. Um, in terms of banks with fewer branches, there has been a trend already. I wouldn't expect this epidemic to materially change it. So
Okay.
that's an issue we are seeing is pretty much has its own logic and dynamic. Maybe the epidemic will push it a little bit because we don't like to go to the bank counter, but I mean already now, if I go into my local agency 3 times a year, that would be the maximum.
Correct.
So I wouldn't expect any big changes there.
Mhm. So the final question from my side would be, what does this mean for the EU becoming a banking union? Do you think that is a feasible goal anytime in future?
So I think that we have been some trend. I mean, a big positive development in Europe when the ACB became in charge of regulating the big banks. So at least the regulator operates on the same scale as the banks themselves, and you
Right.
have less risk of political connivance. When you have someone from country A supervise the banks from country B, it's easier to have someone who takes kind of a cold-hearted,
Correct.
technocratic look, which is the way it should be. There are other elements that are still missing. A common deposit insurance would be one. A common rescue fund. There are efforts to put one together. It's there, but it's still very small. But I think the key challenge there is to really say, okay, is Europe really a solidarity project? And this epidemic is is a clear test you can ask. We have
Correct.
the financial crisis, but you could argue, and some did also, maybe it's not that convincing, that, well, the country is in trouble, that it's kind of their own fault because they were not strict enough on how they handle their finances. Also, they said, I read the euro area crisis as more like a boom bust flow episode in capital flows, money pouring from the center, then pulling back. Okay. We can dispute whether it truly reflected some policy problems in the periphery. This crisis, by contrast, is bad luck. Okay, Italy gets hit. It's not their fault. They just get it for random reasons by the crisis, and then the epidemic started moving north, and we put in the quarantine in places, and we stopped it. Okay. So if in this situation there is no solidarity, then you have to wonder, what is Europe about? Okay. So
Correct.
if a member of the family gets sick and nobody cares, are we really a family? First, I was concerned that this solidarity was taking a lot of time to get in place. There were some glitches. Over the recent weeks, I'm becoming more optimistic. I think there is an understanding that, well, if we don't get that right, people are
Correct.
really going to think what they use, and you're really going to have some issue of populist politics coming into play. And I think now that the French-German couple then took the helm again to a large extent, and we're going in the right way. So I think this will reinforce the way. No, Europe has always been built in fits and bits. It's not a smooth process. It goes in waves that tends to be driven by crisis. But overall, it's working. And no, conversation with a friend the other day made a point that I think was very valid. We're saying, well, Europe was not perfect, and he says, well, so imagine what it would have been like if the EU did not exist, and if we only
Correct.
had individual countries. It would have been much worse. And I think it's a very valid point.
True, true. So, Prof, I have a lot of questions in my mind about Turkey, for example, lira
Hmm.
issue, inflation targets. But given the lack of time, I think we will end it the session here. So thanks a
Okay,
lot.
thank you. My pleasure. Thanks for having me.
So thanks a lot for your time, and yeah, and we will hopefully catch again soon someday.
Okay,
Thank
thank you. Have a good day.
you
Bye
too.
bye.
Bye.